Hello, friends. Welcome to the Weekend Investing DailyByte of 1st October 2024. And a good session to start the month. Yesterday, it seemed like the market will do a continuation of the down move, but China being closed today, it seems that no more funds were moving out of India to move into China. China is going to be closed now for the next 7 days, so they have triggered the entire world and gone for a holiday. Uh, in today's discussion, we have some very startling data. Probably you may not have heard about this data, but is the Nifty 50 cursed? So every stock that moves into Nifty 50 or moves out of Nifty 50 shows a certain behavior, and we are going to analyze that. Please subscribe to the channel if you haven't, and tell me in the comments why you haven't subscribed. If you haven't subscribed, let us know the reason why you're not subscribing. Of course, there is a special payday offer that is going on right now on MI India Top 10. Payday 20 is the user code. You'll get some discount. This is valid till 6th of October. India Top 10 is a Nifty strategy which is designed to beat Nifty over the long term and has done so since going live. Where is the market headed? So market completely flat from open to close, minus 0.05%. It did dip a bit lower during the day, but it recovered well. Um, After the two sessions of fall, we are now in that zone where unless there is motivated selling that happens from FIIs, we should consolidate somewhere around here. 25,800 is somewhere where we are. We've lost about 450 points from the top, and that's a decent starting correction. But if it gets deeper, globally, then of course we will lose more ground. We should be all right, even if it comes down till about 25,000. No issues till then. Below that, yes, some pain will start if we go below that. Nifty next 50 doing better than Nifty, 0.25% up. So it's just a stone's throw from the previous all-time high. No issues here. The good part of the market was that mid caps and small caps did actually well. So the last two sessions, you see long tails on the candlesticks, and long tails show the strength at lower levels. That means that the market pulled back each time there was a long tail. So you can see these examples: long tail and market went upwards, long tail, market went upward, long tail, market went upward, long tail, market went upwards. So these are shorter but still longish tails on these candlesticks, and it shows that the market wants to go upwards. 0.3% is that gain on mid caps, and small caps a complete uh, you can say doji pattern yesterday, and and going beyond yesterday's high is a fantastic clue given by small cap that small caps relatively are looking strong. And of course, once the new high is breached, you will have more tailwind to this move. So small caps are not showing any sign of any distress at this stage, at least 0.66% up for the day. Bank Nifty down by 0.1%. It tried to go up, but it got smashed down. Um, there is now again talk of more cuts by the Fed before the year end. If that happens, I'm sure there'll be another uh, a leg up on Bank Nifty. But for right now, Bank Nifty is showing weakness. It has broken down from the breakout line, um, and is now going to look for some consolidation at some point and take support somewhere. Momentum trends in advanced decline completely even. 261 to 236 is the advanced decline ratio. So the top 500 stocks are showing even balance in terms of the buys and sells. FIIs, of course, sold big on 30th, 9,700 crores, but DIIs bought significant part of that, 6,600 crores. So DIIs in the last two sessions have pretty much matched, actually exceeded what FIIs have sold over the last 2 days. So if you see this math here, this is more than 13,000 crores, and you had almost 11,000 crores of sell. So DIIs are very much capable of providing that contra weight to the market. So not much of fear from the FII selling is there. Heat map was mixed. You had Infosys, Mahindra, Tech Mahindra, you had Adani Enterprise, Britannia. These stocks moved up along with SBI, Kotak Bank, but Unilever, Reliance, Asian Paints, Maruti, Titan, Bajaj Auto, these stocks were continuing to go down. In the Nifty Next 50, you had Siemens, ABB, Adani, and Sol, Indigo, Shriram Cement, Varun Beverages, DLF, PFC. These stocks were moving up, and you had DMart, Chola Finance, PNB, ICICI Pru, LIC, Adani Green, etc. move down. In terms of sectoral trends, IT as a defensive sector came out winning big time, 1.2% up today. So it erased all the losses for the week, and for the month also it is now down only 0.8%. Rest all sectors were very muted, except maybe energy, which was down 0.8%, which is now flat for the week and again flat for the month as well. So energy is just simmering in the background and not able to pick up. PSU banks gradually inching up, but still negative on the monthly charts. IT, as I mentioned, many of these stocks. So this data is incorrect. Ignore the top left window. IT up 1.17%, and in stock spotlight you had K FinTech move up 11% today. So many of these uh, second rung IT stocks are doing extremely well. So look for pullbacks on these stocks, as these stocks are making some base and are looking to go up further. So this is one of the stocks which is really looking good. KFin Tech, if you see on a longer term basis, has gone from nearly less than 250 rupees to 1100 in just a matter of a year and a half. Is the Nifty 50 curve? So very interesting data. At first time when I saw it, I was also very surprised. And I am sure that you will like this data as well. So what is happening from 30th of September? There has been a Nifty 50 index rejig. So every year, twice a year, most of the indices go through a rejig. So because they are mostly momentum orientation, stocks that do well are promoted to the higher index. So from Nifty Next 50, Trent and BEL have come into Nifty 50, and from Nifty 50, Divi's Lab and LTI Mindtree have gone into Nifty Next 50. That is the change that has happened in Nifty. That's all. Other indices have had much larger changes. So now 1.4% of Nifty is Trent, 0.9% is BEL. Inflows and outflows are there. What kind of dollar inflows? And most of it would have already happened because all this is known much ahead of the market. In terms of other weights, there are several other weights that have been pushed down. So, big ones like Mahindra and Mahindra, Infosys, ICICI Bank, all these so many $million will move out. And only HDFC Life and Cipla have some weights up, and you have the two inclusions and exclusions. This is sourced from Novama. So how will the new entrants perform? Startling data tells you, and this is sourced from ET Wealth, that stocks deliver lower returns after entering into Nifty 50. So the orange bar here is the returns of each stock after it entered Nifty, and the green bar is the return of the previous 5 years CAGR of that stock before entering Nifty. So in each of these cases, you can see the green bar is strongly positive. That is why they entered Nifty, and post entering Nifty, their CAGRs collapsed to either lower positive numbers or even negative numbers. For instance, 5-year CAGR of 25 stocks before they entered the Nifty is 35.4%, and the average CAGR after inclusion is 6.9%. So this is very startling data. Of course, this is limited to a certain period, but nevertheless, this is the trend that is seen, that most of the gains happen before the stock enters Nifty, and after that it loses that steam. So two stocks that have entered, Trent and BEL. What has Trent done? Trent has gone up 70x in 9 years, 20x since COVID lows, and 6x since last year. And several of weekend investing strategies have been grateful for Trent to have visited our portfolios. And now, for instance, strategies which were based on Nifty Next 50, which were enjoying Trent so far, will have to let go of Trent because Trent is no longer part of Nifty Next 50. That is part of the game anyhow. So now Trent has performed brilliantly well. BEL also has gone from 20 rupees to 284 rupees since COVID lows. So about another, 14x has happened here. And they have performed brilliantly, both of these stocks. And now they are entering Nifty. And now, as per the prior experience, both these stocks are not likely to do so well uh, going forward. Maybe there will be a lucky break for these two, but I don't know. But the general trend is that this galloping of stocks before entering Nifty will stop. Now, what happens to stocks after they exit Nifty 50? This is another extremely beautiful data, again from the same ET Wealth story. Uh, Here, 23 stocks were studied which came out of Nifty, and in all these cases, the CAGR of the stocks after getting removed from Nifty, which is the green bar here, was better than the CAGR when it was part of Nifty. So all these stocks, whether it was DLF, whether it was HPCL, whether it was Lupin, whether it was ACC, whether it was Tata Power, when they were in Nifty, they were not performing. When they came out of Nifty, they amazingly were performing. So minus 6% when they were in part of index, 12% when they were out of index. So this is some black magic that is happening. You can share your thoughts on the comments, why you think this happens. In my view, most of the information that a stock is going to go into Nifty is known much ahead, and the stock is propped up, and a lot of discounting happens for the reasonable future. And once a stock enters Nifty, it becomes so over researched, over owned, that it loses all its alpha. So essentially, Nifty is that place where most mature stocks will reach, and once they will reach, they have been juiced out like crazy. And once they are let go, the over ownership comes down, because a lot of people who are only looking at index funds will have to necessarily sell those stocks, and the stocks start to have a normal, I would say, a normal behavior in the market. And this is phenomenal data actually, on how stocks have behaved. So now this is some part of the data. I'm not saying every stock that moves into Nifty does not perform. That is not the case that you're making out. But basis this study, there are issues with Nifty 50 induction. And again, front run, uh, which may sound very speculative or manipulative, but again, I mean, once something gets popular, I mean, the charm and the strength of that uh, entity is gone. It'll just go along with the natural growth path. That is fine, but it won't start to hit sixes like it was, when it was a very small company, or when it was undiscovered, so on and so forth. So the same is happening with Nifty 50 induction and removal. Also, reducing scrutiny, allowing focus to companies to focus on fundamental improvement, strategic initiatives, uh, reassessment of values once stock leaves an index, and a lot of these parameters play out. And of course, a lot of FNO, focus goes away. A lot of arbitrage funds only trade on Nifty stocks, for instance. So when arbitrage funds trade, I mean, they will buy, but they will also hedge. So that also creates a different kind of pressures on the price movement of the stock. So this is a very, very unique phenomena. I would like to hear your views on this phenomena, uh, and let me know if this data really woke you up from your sleep. And these kind of insights from the markets, if you're getting from other channels, please do share those channels also. We must subscribe to those channels to improve our information as well. And of course, you need to like and share these videos if you do like these videos, and make sure that people in your friends group, in your family groups, uh, do also upgrade their knowledge about the market seeing these videos. Thank you so much. Bye bye.